Hey everyone! So, the Indian market, wow! It's been a whirlwind, right? It's smashing records, hitting all-time highs, but that leaves us with a huge question. Is this a rocket ship that's just getting started, or a bubble that's about to pop? Let's dig in and break down what's really going on. I mean, this is the question on every single investor's mind. The Nifty 50 is at a record high. So, what happens now? Is this the peak? Or is this just a new base camp for the next climb? Let's figure that out together. All right, let's not bury the lead here. The big takeaway, the bottom line, is that the outlook is moderately bullish. Now, that sounds simple, but the reasons why are actually a fascinating tug of war between incredible strength right here at home and some pretty serious caution signs from around the world. So let's look at the evidence. First things first, we absolutely have to look at what's happening inside India, because honestly, the domestic story is just so powerful right now. This is the real engine behind the current market rally. And let's start with just one number, 12%. What is that? That's the jump in property registration revenue in Mumbai, and it's hitting a brand new peak. Now, this isn't just about apartments and houses, it's a huge signal about the health of our entire domestic economy. Yeah, you heard that right, a 12-year high. That kind of momentum, well, it's kicking off a massive boom in real estate. You've got the big players like DLF and Loda gearing up for huge new project launches. And that creates this incredible ripple effect through everything from cement to steel to jobs. And it's not just about homes. Check this out, a 20% jump in profit for Lenskart. This tells us something absolutely crucial. The Indian consumer is feeling good and they are spending money. This is a clear sign of super robust consumer spending, especially with the festive season in full swing. When a company like Lenskart posts numbers like these, it's fantastic news for the consumer giants. You know, your Hindustan Unilevers and your ITCs. It means people are out there, they're confident, and their wallets are open.
And here's why that spending is so critical to the whole market. Just look at the Nifty 50's makeup. Financial services and consumer goods, FMCG, they make up almost half of the entire index's weight. So it's simple. When those sectors are doing well, the Nifty itself is going to be strong.
So to sum up the bull case for India, it's really built on these solid pillars. You've got a booming real estate market, consumers spending freely, strength in metals and commodities, and a general feeling of optimism in the financial sector. It's a really powerful mix. But, the Indian market doesn't exist in a bubble. While the story at home is fantastic, the global picture, well, it's a lot more complicated. So it's time to talk about the global bears.
And this slide perfectly captures that tug of war I mentioned. On one side, we have some helpful tailwinds. OPEC Plus keeping oil production steady, that's great news for our inflation fears. And a pro-business vote out of Switzerland, believe it or not, actually helps lift sentiment for all emerging markets. But then you look at the other side. The headwinds are serious. China's factories are shrinking for the 8th month in a row, which hurts global demand. And the wild swings in the Japanese yen, that could really put a pinch on our all-important IT export sector. So, we have this powerful domestic bull pulling one way and a cautious global bear pulling the other. The big question is, which force is stronger? It's time to weigh them up and see what the final tally looks like. And after looking at both sides of the argument, the picture becomes pretty darn clear. Right now, that powerful engine of India's domestic economy is more than strong enough to power through the turbulence we're seeing from the rest of the world. And this chart really puts some numbers to that story. You can see it right here. The estimated positive boost from all those domestic drivers isn't just a little bit bigger. It's almost double the negative drag from all those global factors. That powerful imbalance is exactly what's pushing the market higher right now.
Okay, but there is one major wildcard in all of this. Foreign institutional investors, or FIIs. These are the big overseas funds. And lately, they've actually been selling Indian stocks, which acts like a brake on the market. The key thing we have to watch is if that trend starts to reverse. Because if that foreign money starts flowing back in, well, that could add some serious fuel to this rally.
All right, let's translate all of this big picture analysis into something you can actually use. Let's create a clear snapshot with some actionable numbers. What should you really be looking for in the market right now? So here are the numbers that matter. With the Nifty closing around 24,850, the key floor or support level to watch on the downside is 24,700. On the upside, the big psychological ceiling, the resistance, is that 25,000 mark. And all the data suggests the market is probably going to try and push into that upper range pretty soon.
So your strategy can really be broken down into 3 simple steps. First, keep a close eye on those key levels we just talked about. Second, given all that domestic strength, it makes sense to focus your watch list on those leading sectors, like banks and consumer stocks. And third, you have to keep your ear to the ground for news, especially any announcements coming from our own RBI or the US Fed.
So at the end of the day, India's own story has set a very, very bullish stage for the market. But the big unknown, the one thing that could change the whole script, is what the central banks decide to do next. Their decisions on interest rates could either be the fuel that supercharges this rally or the water that puts the fire out. And that right there is the key question to keep in mind moving forward.